Hello there and welcome here to Building Freedom and a little extra video that was actually not really planned for this week. But the news have sped up a bit and everybody's talking about this so-called coronavirus. And I have gotten a lot of questions about if we should be worried. And here we are not talking our health, but actually about the stock market. And I know that it can seem a bit cynical to start talking about money and investments when people are dying of a virus, mainly in China. But I decided to make this video because it is quite a good study into what happens psychologically in the stock market with us investors at certain points when news comes out and we get worried and we might be selling a bit too early or not buying the right stocks. So what I'll take a bit of a look at today is if we should be worried. I'll just give you a very brief summary of what this coronavirus is if you haven't heard already. I'll have a bit of a look at something called the Fear and Greed Index, and we'll have a look at how this can affect the stock market, if anything at all. All right, so let's first have a very quick look at the coronavirus, because and let me just say, all of the articles I'm showing in this video, I will put a link to them below the video so that you can look at them for yourself. And I am sorry about all of these ads over here, but they are a part of the website here. All right, so what is the coronavirus and how worried should we be? If you have a certain age and you remember the news from 2003, you might remember something called the SARS, something called the Severe Acute Respiratory Syndrome. SARS was something that messed a bit with the stock market in 2003, started in February and was eradicated around July, or at least it was contained around July. Yeah, we can see also here in 2002 and into 2003. So this SARS and also something called the MERS, Middle Eastern Respiratory Syndrome, are both caused by this called the coronavirus, and that is also what we are dealing with here. The coronavirus is, as it says, a virus, and people can get affected. We know that this coronavirus, this new sort of coronavirus, it comes from animals. They have found out that it is probably from some sort of meat market where people in China could buy snakes and crocodiles and all sorts of animals to eat. And that's how the first people got the virus, and then the virus mutated so that it could transfer from humans to humans, and that is kind of where the problem is. Now, the thing is this a dangerous virus? Well, there are people dying, but if we're looking at the numbers of people, the percentages, then we can see that you might have heard of Ebola from Africa. Almost 50% of the people getting Ebola virus died. If you're looking at the SARS back in the early 2000s, around 10% of the people that got the SARS virus actually died. And as for what we can see right now, this new coronavirus, it is about 2 to 3%. That can also be a big number if 1 million people is contaminated. But we just have to remember that the people dying of the coronavirus are primarily people already ill. It is elder people, and it is primarily people that would also be killed by a normal flu, a bad case of flu. So 2% is actually not a big number, and if we're looking at the numbers, we should not really be scared. But that is not how the financial system works. And if you look at it, I have some different articles here. The articles are starting to come out. How coronavirus is beginning to hit China's economy. This is from CNBC. Also have one from Seeking Alpha here. Coronavirus begins to hit China's economy. And yes, it does. Because to contain this virus, China is doing the right thing, I think. they are starting to isolate different cities, and in many of the cities where we can hear reports from, they are pretty much shut down, and we're talking about cities with millions of people. And of course, this will affect certain companies. We can see here that, and this is something that makes the case a bit worse even, because it is the Chinese New Year here, the Lunar New Year, and that is pretty much the largest traveling period at all of the year in China. In China, a lot of people are working away from the family for the entire year, and then they are getting home for New Year. So we have millions and millions and millions of people traveling in these days. And that is not smart if people are infected. And the thing with this coronavirus is that there is a period from 2 to 14 days from you are infected with the virus until you get the symptoms. So people can easily travel having the virus in them, but without being ill. And that is one of the ways this can really travel fast. But as you can see, there have been almost a 42% decline in air travel, a 42 almost reduction in rail travel, and 25% drop in road transport, simply because people are choosing to stay in, or they are forced to stay into the cities. That, of course, has an effect. And even though this is in China, it can easily spread out, so that if you have some travel stocks, that could be by airplanes or other. It could be, as you can see here, Disneyland has locked their doors, Starbucks where people meet. Of course, it is the hotels, the Marriott, the Hilton, the Hyatts, and so on. They will get hit by this. The question is, as investors, and here we're not talking about the health and the tragedy of people dying, but as investors, should we put much attention into this? And let me split the answer up in two. Because if you are a long-term investor, if you have put your money into long-term stocks and you're planning to hold them for 5 or 10 years or even more, then the answer is no. You should probably not care much for the coronavirus. Of course, unless of course that it comes to your area, then you should care for your health. But when it comes to your investing, let me just give you a little peek into the stock market. Here we have on a monthly chart, we have the stock market, we have the S&P 500, and here in February to July 2003, we can just make a little box here. This is around the period where the SARS virus hit the world, and people were really scared. And there was a bit of a drop here in February, but then the stock market just went up. And as you can see, if you chose to stay out of the market because of SARS virus in 2003, you would have lost a ton of money. So if you are a long-term investor, and in this case, even though you are planning to hold maybe 6 or 12 or 24 months, then you should not really care about it. That is my opinion. If you are a shorter-term trader, then yes, you might have to follow the news a bit. You might know this. Let me just find it for you. Just a second. Here it comes. The CNN Fear and Greed Index. This is an index. I made a couple of videos about it in Danish. I'm planning one in English as well. But this is an index where they are looking at stock price strength and market momentum and all sorts of different indicators showing if the market is overbought or oversold, meaning that are people very greedy and just buying and buying and buying, not caring if anything's going down, or are they fearful and they don't dare to buy anything? And at the extremes, people are starting to look for excuses to go the opposite way, meaning that just a short while ago, here you can see a month ago, we had a level at 91 out of 100, meaning that we were down here in extreme greed. We were actually up around 96, 97. And what happens psychologically with a lot of investors, also investors that have seen a market like this for the last year or so. We just went up, up, up. What happens here when things have gone well for a very long time, and people have earned a lot of money, they start to get a bit fearful, meaning that there's still extreme greed, but they start to look for excuses to sell. And that can be pretty much anything. I mentioned it in one of my Danish videos just a couple of weeks ago, that people should know that the excuses to sell could come from any news that were picked up and that were just as significant. And that could be something as this coronavirus. So right now, this is all over the news, at least here in Denmark, where I live. We hear about it in all the news. And that could be an excuse for people to sell out in the short run and take some profit and say, hey, it has been a good couple of months. I will take my 10 or 15% I have made these months and then run. But as a long-term investor, I don't really see how this could seriously affect the stock market. Of course, if this virus really spreads quickly, and right now when I make this video, and this is here on Sunday the 26th of January at the evening here in Denmark, the numbers that are out are around 2,000 that are contaminated with this virus, and around 55 to 60 people are dead. That is at least the official number. We should know, and this could easily be a lie, but I just found this this article somewhere. We should always be a bit careful to judge the sources of the news. But here is Beijing suppressing the true scale of infections. Nurse treating coronavirus sufferers in China claims 90,000 people have already been infected. I'm not sure what nurse that is, and I'm not sure if this is a legit source. There are already conspiracy theories out there that it is made by the USA or by the Chinese government and all sorts of stuff. I would not pay much attention to that. But the thing that can affect the stock market in a bit longer time frame is if this starts to really truly affect the export, import. Of course, there are some internal economic effects in China with restaurants closed down and cinemas closed down, Disneyland closed down and so on. But where it could have a bit of a longer term effect is if the economy in China and the effect out to the United States and Europe and so on, if that takes a bit of a hit, if we can see that the growth numbers are suppressed a bit. I think that under the SARS, as far as I recall in a news article I read under my research here, I think that the Chinese growth were suppressed by 0.8% in 2003, and that was mainly due to this SARS and everything shutting down. So it can happen. We should remember in 2003, China had 10, 12, 13% growth numbers each and every year. So right now, a 0.8% drop in growth in China would definitely affect the stock markets. But then again, I'm not sure that it would be a long-lasting effect. The growth number, the economic numbers are still fairly okay around the world. But of course, if this were to be a really long-lasting virus and it spread to United States and people were severely hit there, and Europe maybe we had to close down airports and railways and so on, it could have an effect. But I must admit that right now, when I look at the news, I have a feeling that it is a bit it is given a bit too much significance, and I am not personally worried. I have no doubt that in the coming weeks we could see some drops in prices, but I can also see that in most of the forums where I am active, people are looking for these drops to buy the dips, and that makes me kind of think that at least here for the next week we might see some drops, but I also think that the market will slowly work its way up again. As this, was it Reagan that said it? It's the economy, stupid. And as long as the overall world growth is not affected, then we will see no long-lasting effect on the stock markets. That is how I judge the situation. And of course, I am using my strategy, and that gives sell signals if everything starts to drop. So I will get out fairly quickly if everything goes down, and then of course I can sit it out and have cash on my bank account and wait for some good opportunities again later. So don't panic, take a deep breath, and of course I have the deepest sympathy with the people in China that are hit with this virus. But this focus in this video is mainly the economy and the stock market. And I think, as far as I can tell right now, there is not really any reason to panic. All right. If something really changes here, of course, I will keep you updated. But as far as I can tell right now, you can sleep well at night. If you haven't done already, remember to subscribe to the channel, hit the like button and all that down below the video. As I said, I will link to all of the articles and so on here, and then you can judge for yourself. That's all for now. I'll talk to you again in a couple of new videos during the next week. Bye for now.